Hello everyone, welcome again to my YouTube channel. André Cardoso here. Thank you very much for being here. As always, I hope you enjoy my previous videos from yesterday and the day before. And I hope you enjoy also this one. So let's see what the market has, how the market has reacted since yesterday. And let's start with the cable. The cable still threatening that monthly fractal I shared yesterday, this 134.85. So we're still trading inside this what we may consider as an ascending wedge, kind of. So at this point, we're still threatening that monthly fractal. I'm not sure if I shared this as a potential cup and handle yesterday, but even though, so the retracement back from those levels will form or will suggest the formation of a handle for this cup, which may put cable trading a lot higher from this price zone, so quite a few points above the monthly fractal. But let's wait and see. For now, not so clear, at least for now. Let's wait and see. And what we have at this point is, we can see this on a lower time frame. You can go into a 1 hour time frame. We have this kind of a double top at this point. The market is already threatening again the monthly fractal after printing these lows. So let's wait and see what will happen here. But this minor or this lower degree double top may trigger the expected reaction from this high. So those searching for shorts for the cable, I believe it makes sense from this monthly fractal, but let's stay tuned, because it's a bullish momentum, and we will not be surprised to see the cable squeezing even higher from here. Right above the monthly fractal, as I said yesterday, we have the alt bat pattern completion point, 135.87. So this is my limits. Let's say if the market needs to trade above that monthly fractal and then to fall, those will be my limits in order to search for shorts. So if I need a limit to search for an opportunity to go short for the cable, that will be the level where I will say, okay, above the 113% Fibonacci, I don't want to be involved, and I will get out of that trade as soon as possible. The reason why is because usually when the market fails the bat pattern and the alt bat pattern, the market will then search for an extension higher, and usually we'll search for that 168 extension, which may put the price trading at 140 or 139.81, 140 territory. So that being said, a failure to find resistance at this price zone, let's use the range, which is quite a huge range here, between the 88%, this is almost 200 points. But if the market fails to find resistance, and it has failed, the 88.6 has failed as a potential resistance zone. We have a daily fractal position printed there, actually at 88.6. The market has started to fall, but not enough to achieve the default target or the default expectation, at least for this bearish shark pattern. That being said, the 88.6 has failed also as a bat pattern, and we are now trading below, actually between that range, between the 88.6 and the 113% Fibonacci extension. So I will not be surprised to see the cable push a few points higher. If that happens, we will pay attention to this price zone. But again, we still respecting that monthly fractal resistance, previous structure highs, which may help the formation of this kind of a cup and handle. And that being said, we may see the price trading even higher from above that monthly fractal. Just because we have a pattern there, we are never. It's not granted that the market will find pressure there. So let's stay tuned on those possibilities. So euro versus dollar, and actually, if you, for those searching for longs, I believe as soon as the market confirms a violation of that monthly fractal, it makes sense to engage the market to go long. So what I mean is, if the market decides to find, the market will find resistance above the monthly fractal, and that is granted. We don't know if that resistance and that pressure zone will be the 113% fee, but the market at some point will find resistance, and at some point the market will try a retest of this fractal or of this previous structure resistance. It will turn that resistance into a support level. So usually we will not expect the market to trade 200 points above and then to push back to the monthly fractal. It can happen a lot of times, but usually we wait for that on a minor, let's say a lower degree or a lower time frame to happen. We need to see the market trading above that monthly fractal, and then as soon as the market starts to approach again the monthly resistance, it may offer some pressure and support, and then as soon as the market starts to break above, that may trigger more upside momentum for the cable. But again, that's the reason why I like to search for that 113% Fibonacci extension, especially when we are trading above, or when we are facing the monthly and the weekly fractal resistance levels, because they tend to offer major pressure. So that being said, if the market finds the pressure at 113% Fibonacci extension, that may act as a false breakout, and a false breakout should be followed by a decent, let's say a decent retracement, and that may put the price trading those default targets then for the pattern. That being said, if the market decides to print the alt bat pattern at 135.87, we may see the price then later trading back to the 38% Fibonacci retracement level. So that's the default expectation. So the formation of the bat pattern above, and then the recover of the monthly fractal, and eventually the violation of all those highs and lows printed before. But stay tuned with, of course, with the violation or the invalidation of those sequences, and the price going directly into a crab pattern directly to the 168 extension. So stay tuned on this exercise here. Now, moving forward, euro versus dollar, I shared yesterday the failure of those patterns printed right above this monthly fractal. We need to go and check my previous video. And this is another example where the market may squeeze above the monthly and weekly fractal resistance. We have already the most recent support printed at 121, and actually 121.01 and 121.74 for resistance. So basically we are approaching the 224% Fibonacci extension of this swing low projected above. Okay, so this is an extension of this very last swing low, printing the false breakout below the previous ones extended above. So that will be the last, let's say the last bearish shark pattern point for the market to fall as a shark pattern. Of course, the market can fall from above that level, but this is where the market will complete the next sequence as a potential or eventual bearish shark pattern 122.25, and then the default target for that pattern, throwing the price back to 119.14. That can happen in an indeterminate period of time. We don't know if that will be fast or a slow process until to achieve those targets. You never know how long it will take, but take this idea for euro versus dollar, bearish shark pattern projected right above the most recent highs. Let's see if the market will respect that level. Australian dollar, Aussie, also trading above the monthly fractal, and now using that monthly fractal as there's one of the examples, trading above the monthly fractal and then retesting that fractal again. If the market decides to break above these highs, that may trigger more upside momentum. So above the most recent highs, the market has decided to retest a broken monthly fractal. So as soon as the market recovers above, that may trigger more upside momentum for Australian dollar. And on the other side, if the market decides to recover that monthly and weekly fractals right there, so we may see the so expected retracement. We have also bearish divergence between the previous highs and the most recent one. So between the weekly fractal and the most recent fractal, the market is already printing some bearish divergence. Let's see how the market will react from there also. Then we have the Kiwi. I call your attention to this ascending trend line support, a clear trend line support holding all those lows. And I said that the violation of this ascending trend line may offer some bearish momentum for the Kiwi, that so expected retracement. Attention, why I am expecting a retracement from at some point. I do expect a retracement because I need a retest of this weekly fractal. I need the price to come back to retest this kind of a next zone, and then I need to see the price trading even higher. So basically I'm bullish for the Kiwi, but not for now. For now, I still expect a retracement back to the next zone, and then I will wait for a great bounce with default targets projected there. The reason why I prefer to wait is because the market can also penetrate again that next zone, or can recover those weekly and monthly fractals, and if that happens, we may see eventually a bigger, a major or deeper retracement for the Kiwi, and I don't want obviously holding longs with the price trading against me on this at this magnitude, obviously. So basically I prefer to wait. For now, I believe there's possibility for shorts, and I need to see the price rejecting those fractals in these previous structure highs. New Zealand, Australian versus the New Zealand. I shared that descending wedge and the violation of that descending wedge. As we can see, we have also a clear violation of that wedge, and then a retest, in this case a retest of the previous support level, used again as a pressure zone for more upside momentum. I still believe there's room for more upside momentum, but let's wait and see. We have also the monthly fractal support right there at 105.66, previous structure lows, which may be used as resistance. CHF is now actually extremely heavy. 113% Fibonacci extension. We were trading a few points below that 113% Fibonacci level yesterday, and today the market is already trading. Actually, we are trading in the middle of that range. At this point, I will point to this 161% Fibonacci extension level. This is the bullish crab pattern. And I will wait to see how the market will react at this price level. Since the market has failed reactions, or the expected reactions at those levels, the very last one that we need to pay attention to is this golden Fibonacci level. Then the Canadian dollar also trading below that 113% Fibonacci. The same will apply here for the Canadian dollar. So if the market fails the 113% Fib as the last as a false breakout below the previous lows, the market will fall and we'll search for the golden Fibonacci below. As I said yesterday, if the bat pattern fails you, just grab it. So that's exactly the case. It has failed the 88.6% Fibonacci retracement. It has failed as alt bat pattern projected at 113% Fibonacci level, and then just grab it. The market will sink into those golden Fibonacci levels. Norwegian krone. Now that's one that I decided to go long today morning. Actually, this morning I decided to push a trade for the Norwegian krone. Well, the reason why I pushed this trade, it's supported by those advanced patterns, obviously, but because we are also trading this kind of we can call this a megaphone formation or whatever you want to call it, but this is kind of a formation that I want to see the price reacting after those after this third drive, kind of a third drive formation over a third bottom. Let's say I'm expecting a nice reaction for the Norwegian krone from this price zone. Of course, I have my stops positioned right below the monthly fractal, so I can be hunted right below that fractal. If the market decides to sink, I can be hunted right below that monthly fractal. So that being said, I'm aware of that, and taking that into consideration, I reduce it, and as I suggest always, I decreased my initial position size, so in order to avoid a major loss if the price decides to want my stops positioned right below. The reason why I entered the trade is because we are well supported by this potential trend line support, and let's see if that will hold or not. At least my expectation is for a bullish swing from this price zone without violating the monthly fractal support. It can fail, obviously, but it's my own it's my own responsibility. No, it's no one else responsibility. It's my own approach, and I trade based on that expectation at this point. Let's see if the market will react accordingly to my default expectations, but also the default expectations for the patterns printed there. So let's see. Mexican peso, I said yesterday that I will not be surprised to see a retest again of that weekly fractal or even a reinforcement of this descending trend line resistance. At least it's not for now, as it seems. I still believe there's room for the bullish bat pattern to complete 1935.35, nice psychological number there. So let's see if the price will approach that 88.6. Nothing more to say for the Mexican peso. Dollar versus the yen, I shared patterns above the daily fractal resistance. As we can see, the price is already trading below the most recent support level, which invalidates the formation of patterns above. Of course, we need to ignore the possibility to form those patterns if the price decides to fall. A projection is just pure speculations. It's nothing more than pure speculation. I need to see the price actually printing that pattern for me. So, and yesterday I shared this as a potential approach to that weekly fractal in a form of a bat pattern, so kind of a bat pattern there. Actually, I was projecting that bat pattern at 88.6, saying that if the market decides to trade above the previous structure highs in daily fractal, we may see a retest of the weekly resistance, and the market will complete a bearish bat pattern above. So that wasn't the case. The market has rejected again that daily fractal, and it has produced a new low already below the most recent 4 hours fractal support. And basically at this point, I will not be surprised to see the dollar versus the yen trading even lower. And if the market approaches that weekly fractal, we have the shark, we have a crab pattern actually. We have a crab pattern projected at 168 extension right below that weekly support level. Euro versus yen, I shared this as a symmetrical projection yesterday, saying okay, we should not ignore a possible retracement from these levels. We are trading this potential ascending channel, trend line resistance, the symmetry, and also between at that time we were trading very close to the 88.6. As we can see, a small pressure once the price approaches or once the price achieves this symmetry, small pressure zone, and I believe there's room for some consolidation in this price zone here. I'm not sure if the price will keep trading higher or even retrace deeper retracement from here. There's room for sideways moving process at this point, at this price level. Let's wait to see if that is the case. But as I said yesterday, I will not ignore the price actually trading higher from this, ignoring that sideways and that consolidation process and going directly to the monthly fractal resistance. And if that happens, we have that range box, that cluster box between the golden Fibonacci extension level for the shark pattern above, and we have also the default target for the inverted edge and shoulders. So the default projection for the inverted edge and shoulders projected right above the monthly fractal. So let's say we have convergence or kind of convergence between those levels, both above the monthly resistance for euro versus the yen. Then we have the pound versus the Japanese yen. I shared it also as a potential cup and handle, daily fractal as a next zone or as a resistance. And well, that's what it is. We have also the bearish bat pattern projected above, and the default projection for the cup and handle, or the minor or a lower degree cup and handle projected, or suggesting, let's say, suggesting a visit to the monthly fractal. So let's stay tuned to that possibility also for the pound versus the Japanese yen. Australian dollar versus the Japanese yen also with a new fractal resistance. I shared that fractal at 77.56 yesterday, so the market has found some pressure also there, and just a few points below the minor bearish shark pattern completion point, the golden Fibonacci level. So ultimately we will see the price trading even higher, and if that happens again, monthly fractal and golden Fibonacci right above, converging with this minor or lower degree shark pattern completion point, also the 224% Fibonacci, another and eventual bearish shark pattern. So we have two sharks, one major or higher degree projected right above the monthly fractal, and one taking into consideration the very last period of correction, the very last correction, and an extension of that correction projected at 224, also nailing that monthly resistance. New Zealand versus the yen, I took these as an opportunity, and I shared these with some of the traders that are subscribing to my Telegram channel. So I shared this as a real opportunity to engage the market. We have a nice and clear event here. So New Zealand versus the yen, with the bearish crab pattern printed at 74.04. Actually, the market has failed that Fibonacci just by a few, 1 or 2 points, as I said yesterday, 74.03, 74.04. So basically the price has started to fall, and we assume this as a potential bearish situation to get involved. So basically we're still holding that short. The Canadian dollar versus the yen, also approaching the symmetry from this previous swing high, so as a symmetrical projection of this swing, just a few points above the most recent highs. But we have also that bearish shark pattern completion pointed to 168 extension. So that being said, we have the most recent highs a few points below that completion point. We have this kind of a V-shape, a clear V-shape recovery, but at least for now it's suggesting a recovery from this daily resistance. It's now turning into a support, so I will not be surprised to see the price trading even higher, but that may offer pressure as soon as the price touches this Fibonacci level. So that means we will not be surprised with kind of double top here, and this may act as a next zone. Let's see how it will react, but I expect that I can expect that price zone to offer some pressure, and based on the V shape that we have here, there's only two options. One of them, a complete recover using that support level, a complete recover, or a retest of the previous highs and a fall below the support level. So let's stay tuned to both of those situations, considering that we are also trading the bearish shark pattern completion point, so that makes sense to search for eventual another swing low for the Canadian dollar versus the yen. Now, euro versus the cable, or euro versus the pound, actually, I shared this as a potential or eventual bullish 2618 trade setup. At that point yesterday, we were approaching the daily resistance, turned it into a support. This is also the broken neck for the technical double bottom, so I will not be surprised to see the price ignoring this event and trading even higher without forming that pattern below. But as I said yesterday, this is an if-then situation. So if the market decides to fall into this golden Fibonacci level, we may search for an opportunity to go long, supported by the 200 moving average, golden Fibonacci level, and supported by the default and historical reaction. If you go back and if you search for those 2618 trade setups, you will see most of the times the market reacting accordingly to the default expectations, which is nothing more than a bounce from the golden fib, one first target at the previous structure highs, and then the eventual symmetrical pattern projected above as an ABCD pattern. So let's see if that will happen, because if that happens, an ABCD pattern will force the price into a retracement and eventually more upside down, or upside momentum actually. Okay, so this is the default expectation after forming an ABCD pattern. So let's say a symmetrical ABCD pattern should offer a retracement, usually back to the 38% fib. That's how I tend to search for that as a target. So I tend to search for a 38% Fibonacci retracement. Actually, let's put this a bit clear. Let's actually clone this previous structure like this, and then a retracement from the symmetrical. Okay, so this is basically the default expectation for the 2618 if forged. So we need to wait for the price to form and to fall into those price levels. If the price decides to bounce from these levels, then we will target the symmetry as an ABCD pattern, and the ABCD pattern should offer a retracement back to the 38% fib at least, and then it should keep trading even higher. Okay, of course it can print instead of, and we will see that later, but instead of an ABCD pattern which tends to offer more upside momentum later, it can offer us an ABC correction, and we will see that will depend on the shape of this next swing, but it can print us an ABC correction and then be used as more as a trigger for more bearish momentum. We never know what will happen from here, but an ABCD, a symmetrical ABCD pattern usually will offer you more direction, in more trends, let's say, in the direction of the previous swing. So basically we need a retracement, and then we expect more momentum in that direction. So I still expect for that to happen if the market decides. So I'm not shorting the market, okay? I'm not shorting the market. In fact, for those who are trading that technical double bottom, this was eventually the trigger for more upside momentum, okay? A broken neck, confirmation, and the rejection of that neck zone again now turned it into a support level, and eventually more upside momentum. But if the market decides to fall, I'm not saying I'm expecting more bearish momentum for the pair. I don't know what will happen, but if that happens, my alerts will trigger a few points above that golden fib, which allows me to prepare to engage the market if necessary. And if I need to engage the market from here, is for the bullish side for sure. Now let's wait and see. For now, nothing assures me the market will print the pattern. I just wanted to point that as a possibility. Now euro versus the Australian dollar, also trading. Now we're still trading that major 38% Fibonacci retracement level. The market has felt some pressure there, and we still have this major shark pattern projected at 64.80. So basically, I want to see how the market will react as soon as it approaches this level, without ignoring, obviously, the price can also print that shark pattern a few points above, actually a couple of points above, but let's stay tuned to this convergence between the 50% fib and the golden Fibonacci extension level projected at that price. So that being said, I will wait for some pressure as soon as the price approaches this golden Fibonacci level. Default targets should force a retracement or a deeper retracement back to the daily resistance again. Euro versus the New Zealand, I shared it yesterday on a kind of a fast mode, printing this structure here, saying eventually the market will trade above, usually that after this after this swing high, a consolidation, and then more upside momentum. 224% Fibonacci level, so at this point I'm expecting the 50% Fibonacci to be reached. 174.84 for euro versus the New Zealand. That's what it is. We have also that projected pattern below. Let's not ignore this one also. If the market decides to fall at some point, it's still possible to print that pattern below, but at least for now, the market reacting just a few points below the default, the 224% Fibonacci extension level, the completion point of that shark pattern, and I'm expecting at least a 50% Fibonacci as a default target to be reached for euro versus the New Zealand. pound versus Australian dollar. Let's go into a lower time frame again. I shared this as a bearish 5-0 sequence yesterday, completed at 50% Fibonacci retracement level. Let me change this to the left side, and here there's a 50% Fib level. And yesterday we were trading that we were approaching that Fibonacci level, and I was saying, okay, we have there the bearish 5-0 sequence, so let's not ignore that retracement from these levels. And I was saying, usually I tend to, if I need to, that usually I don't trade those setups, but if I need to for some reason, if I want to get involved on a 5-0 sequence, I will trade the previous structure closes. So I will target the previous structural lows, and sometimes the market will not target those levels. But it has offered some pressure as expected for the 5-0 sequence, but we have now already new highs. And depending on how the market will react from here, if the market keeps rejecting this previous structure resistance level, we may see the price forming the bat pattern above. So at 88.6, 182.19, 88.6. But that will depend, because if the market decides to fall again into this Fibonacci level, I will change, the pattern may change between the default bearish bat pattern and the Gartley pattern. The same price zone for the Gartley, the 127% Fibonacci extension level, it will be projected just a few points below the 88.6, but that it's a very small difference, not significant in this case, but that will depend on how the market will react from these highs. So if I believe the market has room to trade even higher from here. If that happens, I believe it will attempt a retest of the previous structure highs and eventually even higher, 88.6, and or eventual Gartley pattern if the price decides to fall again into this golden Fibonacci retracement level. So this is a golden Fib, so this is the 61.8% Fibonacci retracement level from these lows to the most recent highs. So I need to see a retracement back to the golden Fibonacci level in order to consider then later the eventual bearish Gartley pattern. For now, I still relying on that, on the possibility. For now, it's only a possibility to form that bearish bat pattern at 88.6. Let's see. And again, 88.6, we can use the 113 and then the 168 extension. 88.6 below the previous highs, bearish bat pattern, false breakout above, bearish alt bat pattern, and then eventually extended above, and in this case breaking above the daily fractal, the 168 extension. Note that we are also facing, as I shared yesterday, these potential heads and shoulders. So this is kind of a bearish, this is a bearish pattern, but which requires the violation of these previous structure support levels in order to validate, which will open the window. Let's say it will increase the probability to form then later patterns below. Let's see how the price will react also from here. The cable, the pound versus the New Zealand, also nice bounce from the middle of this range between the bullish sharp pattern completion points. I hate when this happens because we enter the market or at 168 extension or at 224% Fibonacci level, and the market has found support right in the middle of those Fibonacci levels. So that being said, it has failed the shark pattern at 168 extension, and it has failed the completion of the shark pattern extended at 224. So it happens sometimes, and I usually, when the price starts to find support right in the middle of that range, I start to pay attention to that possibility, because it's not the first time, and it will not be the last one for sure. The market will find support or resistance right in the middle of those ranges, between, or of those completion points for the shark pattern. So at least for now, we are threatening the violation of this most recent descending channel. We are also facing the previous daily support level, so I will not be surprised to see the price trading, let's say, the 50% fib. This is the default target for the shark pattern, 193.36. So let's see if the price will achieve those levels. Then the Dixie completely failed the recovery of the weekly fractal support. Yesterday I called your attention to this previous structure support level. We were approaching that zone, and I was saying attention, because if the price decides to reject to trade above or to recover these lows, it may force the dollar to fall, and look what happens from there. The market ignoring that the possible bounce from the golden fib 91.35, and being pushed even lower. So if you go into a weekly time frame, as I said before, we still trading, we still seeing the Dixie trading around that 78.6% Fibonacci retracement. We can also put the 88.6 there as a limit. I saw this as a potential bullish cipher pattern at 78.6, so we still believe the market may react from here without violating these, without breaking below these monthly fractal support. So below the 88.25, that cipher pattern makes no sense anymore. So we need to take that into consideration if the market decides to fall below that monthly fractal. So, but this is a weekly time frame chart. We're still trading around that level, but let's be honest. There's nothing assures that the market will be supported there at this point, with the Dixie trading already below this trend line, also threatening, actually violating this trend line support at this point. So that means said, we are not, nothing is granted, as I used to say, that, and a bounce from this territory, I will not be surprised to see it. But since we are trading below these multi-year ascending trend line support, I will not be surprised to see even the Dixie trading even lower. So as I said, I have a chart here that I shared. I published that chart on a monthly. This is a monthly chart for the Dixie, and it represents very well what I was trying to share with you. This is a monthly fractal, monthly chart. We have kind of a double top. I shared with you yesterday. We have kind of a double top there. This will make it makes these lows as the next zone for that technical double top printed above. So that being said, if the market decides to break below these lows, that will trigger the double top, which may put the price trading even lower, 75.87 for the Dixie. On the other hand, I shared this as a potential, also as a potential, and the eventual inverted head and shoulders. So we still trading that possible right shoulder. So I will not be surprised to see that the price finding support without, as I said before, without breaking below that monthly fractal, using this price zone as a right shoulder, and then the market will trigger the pattern above these previous structure highs. Let's see if that will happen. For now, that's not what we are seeing. That's not what the price is suggesting. The price is suggesting more downside momentum. Actually, the major trend for the DXY is bearish. It's not bullish. So this is a monthly fractal. This is a monthly time frame. And as we can see, we're still trading in a bearish mode, so I will not be surprised to see more downside momentum without, as I said, without ignoring that the possibility to form that right shoulder and using that cipher pattern as a trigger, let's say, or as a motive, if you wish, a motive to trigger, or a motive to get involved on that right shoulder formation. Let's see if that will happen. I have a video. Actually, I believe I started my previous video from yesterday talking about this DXY and all those potential events. Now let's go into gold and silver to finish. And we still have this dollar is now, this is a 2 hours time frame. We are now facing the 200 moving average on a 2 hours time frame chart, which is putting some pressure there. If you go into a 4 hours time frame, the 200 moving average is pointing a few points above 1872 at this point. We have also the default target for the shark at 1864. Silver, very similar and even more perfect than gold, because it has nailed the 113% Fibonacci extension as a bullish alt-bat pattern. Also one of the trades that I pushed for my subscribers for the gold bullish alt-bat pattern, default target already achieved. We are also approaching the second target that I projected at 2443, the golden Fibonacci level. As soon as the market touches that golden Fibonacci level, I suggest a trailing stop with our stops positioned already adjusted at profit, and let the market and trail that position. So this is crude oil now trading above the previous structure highs and daily fractal resistance. I shared this yesterday as a potential descending flag or a consolidation process, and I shared with you the possible violation of this structure resistance above. So we have that crab pattern projected above, and the market has already found some pressure at 46.52. We have the pattern just 4 points or 6 points above, actually 8 points above the most recent high. So that means said we are approaching that bearish crab pattern completion point for the crude oil. At this point, we need to see the price. If we need to get a clear shot for this one, I need to see the price recovering below this trend line. That will confirm the recovery of the daily and the most recent 4 hours fractal resistance levels, which may also, which may increase the probabilities for the crab pattern to work, and then I will see if crude oil will sink or not. Now, SPX 500, I remain, I still waiting for something to happen. At this weekly fractal, it can fall below these ascending trend line support. I believe there's room for that to happen, but ultimately we will see the price squeezing higher, and this is a golden Fibonacci extension of this very last swing low projected above. So in that sequence will produce, or will form, or it may form the bearish crab pattern. Again and again and again, I can't get tired to repeat, nothing is granted. We never know the outcome. We never know if the price will print the pattern, ignore it, or will respect it as a default target expectation. The market may react to that Fibonacci level. If not, we need to search for other events. The Dixie, as I said yesterday, I have shorts with my stops positioned right above this monthly fractal. It's a small position size. I decided to decrease my initial volume or initial position size and try to sync with the Dixie, with the DAX, and the formation of this right shoulder. Let's wait and see for that to happen. Eventually, the market is now it's threatening the violation of this ascending structure again. Let's see if the market will violate that structure or not, or it will bounce again. Now, this is the Bund with the bearish Gartley pattern projected at 176, basically 127% Fibonacci extension level. We have also the bearish 5-0 sequence on a lower scale or a lower degree or a lower time frame. You can see this as a bullish shark pattern completed there. So we have this previous actually we have these previous structural highs, a retracement, and new highs there, a false breakout just a few points above the previous one, and then the golden Fibonacci right there, the 168 extension converging with the golden Fibonacci retracement level, and both levels creating kind of a cluster zone with the price bouncing from the golden Fib, the bullish shark pattern completed. Default expectation for the shark, 50% Fibonacci retracement level right there. The price starts to bounce, 50% Fib, bearish 5-0 sequence. So we expect some pressure at this point. We can expect the Bund to trade a few points below default expectations or default targets. As I said yesterday, a retest of this, or at least one approach and a retest of these previous structural lows, and eventually more downside momentum above the daily fractal. And because the market can fail that default expectation and trade even higher, but if the market decides to break above that daily fractal, we have the potential Gartley pattern, in this case projected at this descending trend line resistance. Let's see if the market will respect that one. Very much constructive, interesting, and reacting very well to those advanced pattern formations, not only those ones, but previously also respecting some of the patterns formed. For now, for the bonds, I see this as a potential, nothing more to say. I see this as a potential technical double bottom, which will make this resistance as a neck. So basically we need to see or a validation of the pattern trading above the daily fractal, or the invalidation of the or trading below these lows will invalidate the double bottom, which may force even more downside momentum for the bond. We have also, if we put a retracement here, we have also the 88.6 as a potential bullish bat pattern right below the weekly fractal. So basically we can wait for the 88.6% Fibonacci retracement to be reached, and we wait for a reaction as soon as the price approaches those levels. Again, nothing is granted. We can see the price ignoring completely these levels and trading even lower. Let's see how the market will react. But for now, and because we have this technical double bottom there, I believe that if the market decides to trade below, it will trade even harder. It will fall even harder. So let's see how it will develop. Now, Bitcoin, I shared this also with some of you. We have patterns projected. Actually at 30,000. So I will not be surprised to see Bitcoin at some point on a mid-long-term perspective being pushed to those levels. But first things first, we need to wipe out those previous historical highs, and the market is for now rejecting that idea. So let's see if it will fall or not from these price zones. More constructive Ethereum, I think, and this may act for both Bitcoin and Ethereum. Both of them creating this kind of a cup and handle at this point, so I will not be surprised to see these acting as a handle and then the market trading even higher. Bitcoin, very similar price behavior as Ethereum. Eventual cup and handle, which may put Bitcoin trading even higher. It may act as, of course, it will not act as a technical double top, but we may face this as a double top if the price decides to go immediately. And when I say immediately, I say aggressively. If the market falls aggressively into these previous lows, I can see this shape as a potential double top. But if the market decides to trade progressively, step by step, we will face a different type of price behavior, which may guide me into a different type of structure, eventually kind of a flag here. You can see something like a flag formed here, and then the price trading even higher. But if the price falls immediately from this price zone, we may face this as a V shape and a false V shape recovery, and with a double top and a false and the violation of the next zone. So let's wait and see. Nothing very specific for now. I will not ignore the formation of a consolidation process both for Ethereum and Bitcoin. So let's stay tuned to that possibility. Cup and handle, possible consolidation, kind of a triangle there or a flag. Let's see how it will react. Well, for now I'm paying special attention for the New Zealand versus the yen, which was the last trade that I pushed together with the Norwegian krone. So that being said, that finishes my review for today. I hope you enjoy. I hope you take some advantage from the information you get here. And well, I hope you all the best for you and for your families, and I wish you all a nice and a beautiful weekend with your families. Thank you very much for being here as always. See you the next week.